Welcome back to Alpha Recap. I'm glad you're here. We wrapped the trading day and we have a lot to unpack. Big deals, renewable momentum, and a headline crypto exploit that rattled markets. As always, if you have questions, you can reach us at stockalpha.ai.
Thanks for having me. Lots to break down. Honestly, I was a bit surprised by some of the cross-sector moves today.
What really stands out here is that the tape wasn't one thing. It was a bunch of big, idiosyncratic stories that pushed different sectors in different directions.
Right, we saw capital chasing tangible assets like utilities, materials, and certain industrial names, while more binary risk areas like crypto and cannabis got hit.
Let's start with the big deal noise. USA Rare Earth announced an acquisition that landed pretty large. Can you summarize why that mattered?
Sure, the deal was about $2.8 billion. Analysts note that size signals consolidation in critical minerals. Companies and governments want domestic supply chains for batteries, EVs, and defense. The headline re-rated materials and mining names tied to rare earths.
And it wasn't just that one deal. Brady's deal was roughly $1.4 billion, and other industrials showed strong order books, like Cleveland Cliffs. That gave industrials a pro-cyclical tailwind, right?
Exactly. Elevated order books act as a forward revenue signal. When you see both M&A and backlog support, it suggests durable demand for capital goods and reshoring, which feeds materials and manufacturing. Big move.
Now for the shock. The crypto story dominated headlines. Can you walk listeners through what happened?
Yeah, that tracks. There was a hack tied to a decentralized finance group that drained about $292 million. That prompted emergency freezes on an Arbitrum-based bridge, and active laundering concerns cropped up. It was the day's most acute risk event.
That was rough. How did markets react to that specifically?
Crypto as a whole sold off, and risk appetite pulled back for higher tail risk products. Analysts note that events like this amplify regulatory scrutiny and increase counterparty worry. So liquidity pulled into safer, tangible assets.
Hold on, say that again. Why does a single exploit matter systemically?
Good question. A big exploit shows operational fragility, code vulnerabilities, custody gaps, and limited insurance. When that happens, people demand better proof of reserves, custodian arrangements, and clearer rules. Until those controls are visible, capital hesitates.
Right, and I want to be clear for listeners. That's analysis, not trading guidance. We aren't telling anyone how to act.
Totally. Analysts note the importance of operational controls without making specific investment calls.
Switching gears, utilities were on the outperform list. What drove that?
Renewable buildouts, storage deployment, and perovskite partnerships. More solar projects and microgrid stories gave utilities more revenue visibility tied to electrification demand. Data suggests investors liked steady cash flow exposure to the energy transition.
So that ties into the material story we discussed earlier. Demand for critical minerals.
Exactly. Energy transition connects utilities, materials, and industrials. If you build storage or batteries, you need materials and factories. Permitting and capital intensity are common risks across all three. Not what anyone expected.
Let's talk policy and permitting. You wrote that this is a common multiplier. Explain that simply.
Sure. Think of permitting like an on-off switch. For cannabis, a court pause or a state roadblock can instantly change which companies have growth paths. For a rare earth project, a denied permit or financing gap can stop production for years. So policy events can act as binary catalysts that rapidly re-rate assets.
Cannabis had a tough day too. What specific frictions were in play?
Mixed state signals. Virginia had roadblocks, and a federal court put activities on pause in Rhode Island. That kind of unpredictability made cannabis names volatile. Analysts note policy calendars are now core inputs for anyone tracking that space.
I mean, when you step back and look at this, policy calendars really matter.
Right. And the other thing is, timing matters. A ballot measure or a court ruling can flip sentiment overnight.
Let's cover real estate quickly. There was heavy deal flow and also some margin pressure. Summarize the tug of war.
Deal flow was meaningful. For example, a $216 million FHA healthcare loan and about a $4.7 billion Department of Transportation funding boost. Those moves support liquidity and activity. But rising property insurance and operating costs are squeezing near-term yields for REITs and developers.
And there was a big number thrown around about housing wealth.
Yes, about $14 trillion in housing wealth came up in the context of reverse mortgage innovation. That's a long-term idea, but it brings policy and consumer protection questions into the mix.
Quick reactions. Consumer and retail headlines.
Retailers leaned into automation and same-day fulfillment. Home Depot doubled down on automation plans, and another large retailer expanded e-commerce into Mexico. That pushes demand for robotics, logistics, and industrial capex.
Yeah, that tracks.
And to add to that, execution will determine winners, and legacy players still face pressure from debt and older cost structures.
All right, let's surface the cross-sector themes in plain language. Number 1, policy and permitting. We covered that. Number 2,
Energy transition, linking utilities, materials, and industrials. In simple terms, the more you electrify, the more you need metals, factories, and grid upgrades. And that ties those sectors together.
Number 3,
Mergers and large transactions are reshaping narratives. Big deals can compress risk premia if they create scale or offtake certainty, but financing terms and integration are immediate watch points.
Number 4,
Security and operational risk. The exploit highlighted that custody, audits, and insurance are now valuation differentiators, especially in crypto and decentralized finance.
Number 5,
Consumer automation and AI are driving cross-sector capex. Retail automation raises demand for industrial robotics, and that flows back into materials and edge compute.
nice summary. Can we pull out some actionable signals? Informational only, as always.
Analysts note a few clear items. Treat policy calendars as catalysts. Reassess operational risk in crypto exposure. Read M&A and order books as leading demand indicators. Monitor cost inputs for income sectors, and watch EU cloud regulation for tech exposure. These are filters to prioritize further research, not trading advice.
Hold on. Reassessing crypto operational risk. What does that mean for someone who follows the space?
Look for counterparties that disclose proof of reserves, have insurer arrangements, or use established custodians. Data suggests those disclosures reduce counterparty uncertainty after big exploits.
Short segment. Any immediate catalysts to watch this week?
State and federal policy rulings on cannabis and psychedelics. Updates on the crypto exploit recovery and any enforcement actions, and M&A approval timelines for the big deals. Wait, really?
We should flag risk factors. What's front and center?
Near term, regulatory timetables and fallout from the exploit. Medium term, financing and permitting for materials projects. Macro, interest rates and construction inflation can squeeze real estate and leveraged M&A. Geopolitics can swing commodity prices quickly.
We touched on a lot of sectors. Any sector quick hits before we wrap?
Utilities, constructive on renewables and storage. Materials, consolidation and strategic demand, but permitting risk. Industrials, durable pockets of demand. Crypto, security shock and tighter scrutiny. Consumer, automation and selective winners. Tech, AI momentum versus EU cloud policy overhang.
That's a lot. But it helps frame the market as more of a rotation than a rally. Final takeaways, quick and clear. Hit me with 3.
1. Capital chased tangible deals and infrastructure today, lifting materials, utilities, and some industrials. 2. binary policy and operational events, like the crypto exploit and state cannabis rulings, compressed risk appetite elsewhere. 3. The pace of the energy transition will matter, but permitting, financing, and security controls will dictate velocity.
Perfect. And a quick reminder on language. Everything we've said is analysis for informational purposes only. We didn't recommend buying or selling any security.
Correct. Data suggests these are themes to follow, not instructions.
Okay, that's our recap. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.